If you want to know what the market is likely to do this week, as well as your favorite stocks, then this is the video for you. We have some data that's coming out this week, economic data that's very important. We also had a very nice rally at the end of last week. But what does all this mean? Well, I'm going to explain it all to you in this video, and stick around because I'm going to show you a very powerful tip on how to gauge what the stock market is likely to do Monday morning. So stick around for that, and stick around for this entire video because I'm also going to show you a very powerful strategy that I use to gauge the market every Sunday night and where it's likely to go on Monday morning. I'll be showing you how to do that. We're going to look at the VIX, the economic data. We're going to look at some charts and understand exactly what's going on. We're going to look at SoFi, Palantir, SPY, Meta, Google, and Microsoft to figure out exactly what is likely to happen with these stocks this week. And a lot of the things I'm going over in this video is what I go over with my students in Discord in our weekly, twice a week coaching call. So if you are interested in making profits and consistently learning and growing your portfolio to achieve your goals, like my students, I would love to help you. Link is in the information box below. Click on that link to go to investorcorey.com. Click on training and you'll be able to book a call with my team and I so I can get started helping you achieve your goals. So we're looking at the VIX right now, and there was a lot of fear. Anything above 20 is high fear. Above 30 is insane fear. It's absolutely crazy. On the 4-hour candle, it spent about 2 or 3 days running up, and then it spent another week coming down, going back up, and then it spent another week going down and coming back up, but really consolidating and just kind of staying in between 30 and 55, like just bouncing around. A lot of strength in fear right around 40 for that time. And there was a lot of it. But then it gapped down. And since it gapped down, which is when Trump paused the tariffs 90 days, which was back on April 11th, the VIX has not made it beyond $38. This is very good. You can see that the highs on the VIX are 35, but it stayed in the 30 to 35 range for another week and a half, almost 2 weeks, and then it started fizzling out. The only thing is right now we're still near the bottom of this area right here where the volatility spiked. We're at the top of this gap. We need to gap fill. And typically in stocks, gaps always fill, or at least most of the time. This is likely to be the case this week. We can see that the 10 has dropped below the 20. They've both dropped below the 50, and now they're crashing below the 200-day as we speak. They've already dropped below the 100-day. So the fear is dropping very rapidly. And this is because Trump put out news that he has been in talks with 200 countries. I don't know if this is true, but I would hope that it is. And that he's also been in talks with China on tariffs. So that's also a good thing. And he said he's going to take it easy on China. Now, I've said this before. This is a lot of manipulation going on, but it is likely that a big portion of this is potentially true. So the markets are reacting. However, there is still a little bit of ways to go on the VIX. If we see the VIX Monday morning on opening bell start dropping down, filling this gap and coming down into the 21 or even the $20 range, we definitely are headed to a complete reversal in this downtrend, and we're getting ourselves a little bit closer and more comfortably out of the fire, so to speak. We need to see that. If the VIX was to come down and hit this area right here, consolidate and come back up, which is also a very strong possibility based on this data that we have coming out, which is job openings on Tuesday. And then, of course, on Wednesday, we got personal spending and income month over month and core price index, which is going to be on Wednesday. Then on Thursday, we have manufacturing PMI, and then we have unemployment on Friday. So I can tell you very sure, not quite 100%, but I'm very sure based on historical data and based on how the reaction to the market typically is, I am very confident based on data that we will likely see a decent drop in the VIX Monday, and then it'll start to rise for Tuesday and drop when we get data if it's good, come back up for Wednesday, a little bit higher, drop if data is good. It'll fizzle out, and then on Wednesday night going into Thursday morning, it's going to spike a lot due to manufacturing. If that is better than we expect, or at least we meet the expectation, that'll calm down a bit in the afternoon. And then Friday, it's going to come up again. And I think no matter where we end up on the VIX this week, down here, wherever it may be, I think Thursday and Friday, it's going to end up back in the 25 range because of manufacturing data and because we normally don't beat manufacturing data. And if we do, it's usually by a smaller margin. But more importantly, unemployment rate. So there's going to be some spikes somewhere midweek. If unemployment rates are what we expect or better, and the tariff talks this week go pretty well, then we could see a plateau and a level off, and we could have the VIX potentially reach into the 20 range or even lower this week. But I do feel Monday is going to be decent, and Tuesday and Wednesday could be depending on data, but Thursday and Friday, there's going to be a lot of volatility because of this data coming out. And if it's all strong, we have PMI services data the following week. I'm not sure exactly which day it's on. I believe it's going to be like the 5th or the 6th, but I have to double check. So that data is also going to be very important, but we typically crush that data anyway. Looking at SoFi, very, very strong. We have earnings coming up, which is Tuesday. Typically on earnings, I like to sell if the run is really good. As we can see, SoFi is resisting this area. It broke it, and now it's approaching up to the 1350 range. Now, what I think is going to happen Monday is we're going to have a decent rally, especially the market's good. And as long as volatility is good, no bad tariff news comes out, I think that SoFi could potentially run up into the 1350, 1370 range. If SoFi runs the 1370 range and starts seeing some resistance, I might be hesitant to hold. I might sell my position. I'm not exactly sure, but this is a long-term hold anyway. But if you're looking to just make money, we could have this resistance happen at 1350. And typically what happens is in the morning of earnings, you'll see a lot of fluctuation. And if they don't meet expectation, which SoFi really has never been in that position, at least not for the last several quarters, then the stock will go down and up. It'll end up rising a bit, but then big money will end up taking some profit. So it could end up back down here at 1220 or 1150, depending on how earnings goes. But if earnings beats and crushes, then SoFi is likely to break through this 1350 and up into the 1450, 1475. But I am really honestly holding SoFi long-term. But hypothetically, if I was looking to just run the wheel strategy, I'd be very cautious about earnings, but Anthony Noto's done a very good job at beating the expectations consistently. And I think SoFi is going to do okay, but it's hard to tell how the previous quarter was considering everything that's happened. Nvidia is also having its issues, and I want to go over some stuff with Nvidia that is concerning. Nvidia is long-term a very good stock, and you can see that if we look at this downtrend, I have one touch, 2, 3, and then if I move it over a little bit more, right there would have been the 4th touch. We peaked, couldn't break out, peaked again, couldn't break out, and you can see that it finally broke out. So we have now broken out of the downtrend. We're in a consolidation. But one thing I want you guys to understand is that for this to be a very strong breakout, there's 3 things that I'm looking for. Number 1, I want to make sure that the 50-day is crossing over the 100 and the 200. That's happened. Check. We have now got ourselves into an overbought position, which I do not like. So that's a negative. We also have not broken these previous highs. So that hasn't happened. So those are the 3 confluences. I'm waiting on this to happen. So essentially, Nvidia has got to break 115 to 118. Like somewhere in the 115, 118 area, it's got to come up here and break through. Until that happens, we're not really fully in a complete reversal. The stock market is kind of just breaking out of the downtrend and consolidating as the fear subsides and the market comes out of extreme greed. However, Nvidia has not done that yet. And most of the stocks haven't either, but just letting you know about that. This is a very good long-term hold, but if you're looking at trying to make money and get in and get out right now, it's very risky, but the reversal has begun. You can see that there's a lot of consolidation. It's starting to work its way up, but essentially, in order to stop this downtrend, we really need a break of structure. So my break of structure right now is Nvidia has got to break above and close a 1-hour candle above 115. It needs to close above 115 on the 1 hour or the 4 hour. Until that happens, we have not seen a full reversal. Like right now, we're just breaking out of the downtrend and consolidating. Looking at Tesla, we can see that Tesla is significantly better. Just like I said with Nvidia, the 50-day has crossed over the 100. The 100 has crossed over the 200. The 10 and the 20 are in the proper order. The 10 above the 20, and they've both crossed above. When we look at this, Tesla has broken the previous highs. It's all the way up here, and it's trying to break this high. But the break of structure happened right here. This was a break of structure, and this was the change of character. Now, both of these happened pretty much last Wednesday, Thursday, Friday, even after earnings didn't do so well. This shows a lot of strength. If Tesla can break 292 to 295, closing above 292 to 295, somewhere in this area, if it closes above that, we are looking good on Tesla. And it looks like that's likely to happen. And if I was to bring up my volume indicator, there we go, bring volume up, we can see there is a lot of volume, a lot. And if we go back and look at the volume, 167 million, which is really good. So there's been some institutional buying on Tesla, and it's had a change of character and a break of structure. So this looks really good for Tesla. I would say that if Tesla breaks 292 to 295 and closes a 1 hour and a 4 hour candle above that price, outside of bearish news or bad news with tariffs, Tesla has pretty much already started its reversal and it's working its way through it. And I would say it's almost safe to say at this point that Tesla has achieved that. It's on the brink of achieving a reversal. It's consolidating in this range right here, and it's breaking above, and it's trying to push through. I want you guys to understand the SPY encompasses Apple, Microsoft, Meta, Google, and a lot of other stocks. But the top stocks are Apple, Meta, Microsoft, and Google. And these stocks are what really dictate the pace of the SPY. So when you have a situation where Apple is dropping and Meta is dropping, but Google and Microsoft are doing okay, SPY is still going to go down. If Apple's not doing well, but Microsoft, Meta, and Google are all doing well, then SPY will be going up slowly. If they're all doing well, decently, and going up slowly, well, then the SPY is going to fly. And when you look at the SPY, you can see that it is doing very well. And right here, we had a break of structure and clearly a break of structure here. And the change of character happened right there. Change of character, break of structure above the downtrend. The SPY is actually breaking out of this downtrend as we speak. Very strong so far, but there are confluences I need to see. Number one, which has happened, the 50-day is above the 100, and the 50 and the 100 have both crossed above the 200. Very good on the 1 hour chart. 10 above the 20. This signals that it's working in the right direction. However, the one concern that I have is it's slightly overbought, but not quite. So this is not too bad, not as bad as Nvidia. Another thing that I'm looking for is for SPY to break through this bottom down here and break up into this lower high that it was making before the big drop. So we really need SPY to close a 1 hour and 4 hour above 572. When SPY breaks 572 and closes a candle, that is now into bullish territory. Right now, it's more coming out of bearish into neutral. We need to see this move happen for a clear indication of a full-on reversal into bullish momentum. We look at the volume and we can see there is not a lot of volume on the SPY. There wasn't too much on Friday, but there was a lot on Thursday and even more on Wednesday. Wednesday and Thursday, a lot of buying. Friday, not a whole lot happened. Big institutions took a pass on Friday. They didn't want to trade. And typically, that's the smart thing to do. Whatever you see going on in the volume, that's what you want to follow. When a stock like SPY or an ETF doesn't have but a $3 or $4 move up all day, slowly and consistently moving up like this, and there's not a whole lot of volume, it shows you big money and big institutions are not really buying or selling. And if you're having trouble understanding this, buying and selling big institutions, volume, or any of the data that I'm talking about, I teach this to my students consistently to help them understand the market better. It's what helps them achieve their goals and make better decisions in the stock market. If you're new, or maybe you're losing money, or you're looking to retire, maybe you'd like to jump in and start learning the proper way and learning all of my strategies. This way you can take control of your portfolio and your future. I would love to help you out. You guys can sign up at any time at investwithcorey.com. The link is in the information box below. Just click on training and you'll be able to book a call with my team and I so that I can help you achieve your goals. So it drives me every single day. I already have a lot of money. I don't have to do this, but I thoroughly enjoy doing it as it's what drives me every day. It is an accomplishment to help others, and it truly is a goal of mine and a passion of mine to trade and coach you and others just like you achieve your goals. So look forward to seeing you in the Discord real soon. So we're looking at SPY right now. And like I said, it is going to be a little bit of an upwards struggle to break through into 570, but we never know what kind of news we're going to get this week. So SPY is looking pretty good. Looking at Meta, we can see Meta has had a pretty big downtrend here, and it's mostly because of the court case they have. But again, they have broke out of this downtrend slightly, and they have now resisted it. I'm looking for some confluences here. And number one is the 50 above the 200, check. 10 above 20, check. And we also see the 100 approaching the 200. That hasn't happened yet. We're not overbought or oversold, which shows some form of strength because it's not overbought, but the price is still holding. The other confluence I have is right here. It bounced off the downtrend line, which is consistent with this support area right here. Check, showing strength. The stock has broken out of this downtrend in this really low area down here, which is not good. And then another thing we're looking for on Meta that I specifically want to see is I want to see Meta break above 586, this most recent high right here. This price right here is where Meta needs to go above. And we can see that Meta is sitting at 547. So we can see that the change of character actually happened right around here when it broke above this area right there. And then the break of structure officially happened here when it broke these highs. So this is all strong. But what we need to see now is we need to see Meta push its way forward with earnings. And if they beat earnings and the stock ends up coming up around here and breaking 580, 590, then we are definitely in the uptrend again for Meta. Looking at Microsoft, it's pretty much the same story with Microsoft. Going all the way back to March 26th on the 1 hour, we're going to switch over to the 4 hour chart here, and we're going to see exactly what's going on. We're going to go back to the beginning of this mess, and we can see that if we were to do that right there, that we're still technically in a downtrend for Microsoft. But if we were to have drawn a downtrend right here, touching 1, 2, 3, and 4 candles right there, this would have been an accurate graph had we done this back in the beginning of April. We could see it tried to break above and then came back down. So we would get a lot of strength by doing it right here. So you can see 1, 2, 3 touches, 4 touches, 5, 6. This is very strong. The more times it touches, the stronger it is. So this is a very powerful, strong 4 hour line. And what makes this even better is it broke above right here and used it as support. So right there, it broke above, came back down, touched it, and moved above. So officially, we have support right here, check. We also have the fact that we got a change of character right here, check. And then we have a break of structure in progress right now. So if it breaks above 395, then we know for a fact that this is going to start reversing, or pretty close for a fact. So if Microsoft breaks above 395, which is a complete break of structure right there, then we have a complete reversal happening. Right now, it's just begun. We've broken out of all this downward pressure, and it's having a lot of trouble breaking 393. If I look at volume, it's likely because big institutions are not making any moves. And as we can see, the volume's very low. Back here on this big green candle on April 9th, when Trump paused tariffs, you can see how big institutions jumped in. But now, look at all the volume. There's not a lot of volume. And this is key. Data this week on interest rate cuts, tariffs, and fundamental data, inflation data, jobs, PMI manufacturing, services data, All of this is important in order to give more confluence to big money, to create more volume and to create more movement in the stock market. Next, we're looking at Google, and Google is much stronger than Microsoft or Meta or any of the stocks we've looked at this far. They absolutely crushed earnings. And because they crushed earnings, they're going to bring the Mag 7 in the tech stocks up with it. How much is likely to be seen based on data this week, but definitely going to help out. We can see 1 touch, 2 touch, 3 touch on this 1 hour downtrend, and it broke right above it. No doubt at all, definitely had a break of structure here, here, and here. Complete structure break, and right here and here change of character. So we have some stability right here, which is a check. We are not overbought. We're actually approaching oversold, and the price has not dropped a lot. So that's pretty good check. We have the 100-day above the 250 above the 100-day, and we have the 10 and the 20 diverging right now, and they're above as well. When we go over to the 4-hour chart, we can see it's pretty much the same thing. We have the 10-hour above the 20, crossing above the 100, and the 50-day is working its way up to diverge on the 100-day, but they're still below the 200-day moving average on the 4-hour chart, and there's a lot of divergence happening here. So if Google was to fall below 158 and consolidate down in the 158 range, that shows pretty big weakness after this big of earnings, and it shows the lack of volume and commitment to buying the stock. So that's what I'd be looking out for this week. We can see on the volume, there's a lot of red volume on the 4-hour charts, and this big red volume is actually very, very bad. There's been a lot of volume, and it turned red. Big institutions were overpowered in selling, and they were selling into a strength, which is what they say at hedge funds to preserve capital. Selling while the price is high to take their profits to prevent a loss of money until there's more confluence to be sure the stocks are going to go back up and the stock market is healthy. And so we absolutely need Google to stay above 159. It needs to stay above this purple line, 158.90. It needs to stay above that. Otherwise, it's potentially going to dip back down into consolidation, and that is not good. Looking at Palantir, clearly stronger than any of the stocks we've looked at today. Nothing even comes close. We are headed into earnings. There is a very big uptrend right now. We had a change of character here, break of structure, another break of structure, and another break of structure, and approaching all-time highs with Palantir. All-time high being 124. We're still $12 away, and earnings are on Monday, May 5th, which is a little over a week out. Now, I would not be looking to trade Palantir because earnings are coming up, and not only that, we're overbought. Great uptrend, lots of strength, but if they miss earnings or something happens, the stock could come down. If tariffs have bad news or something happens, the stock right now is a little overbought, in my opinion, and it's bought based on earnings, future guidance, and the very recent positive news and developments we've had in tariffs. So if tariffs backpedal and data this week with PMI manufacturing and other data is also bad, then the stock is likely to come down. And especially if earnings don't meet the expectations, then it's going to be a disaster and you're going to be getting into this stock. And what would happen is if tariff news gets worse, it'll trickle down and consolidate. And if other news comes out that's worse, it'll drop. And if earnings are bad, then it can end up dropping like that. So this could play out. Stock can end up back 80, 85. Now, I don't think it would drop quite that low, but it could. But essentially, there is a risk between $80 and $95 returning to this range if they don't beat earnings, tariff talk is bad, or data this week is not good. Now, to play this strong, you don't want to be trading this stock right now while it's pushing all-time highs. Really, the time to buy this stock would have been when it was $80 or $85 or even $90. The only logical scenario here would be to go out a month and sell puts way down here at 85, because even if data this week isn't good and tariff data comes out bad or news is crazy, or maybe Palantir just doesn't meet expectations, or they don't beat as much as everyone expects them to, stock could drop, right? And if it does, 85 is still strong and you have a month. So it'd be better to go out a month and sell $80 puts or $85 puts than it would be to go out a week or two and sell 90 or 95. Because in my opinion right now, to be safe, anything above 90 or 92 isn't really safe due to the fact that we don't know what's going to happen this week with earnings. If you plan on holding the stock for 5 or 10 years, then it's kind of irrelevant. You could buy some now and sell some puts down there, but you really have to watch what's going on this week. And I'm going to show you something that's going to help you out a lot on how to gauge the stock market every Sunday night. And not only that, gauge the stock market the following morning, every single night, the night before. I'm going to show you something that's very critical to understand in the stock market. It's something else I teach my students in the Discord. So if you like these strategies that I'm teaching and you want more of them, and you want me to help guide you and mentor you into more powerful positions and understanding the stock market better, I would love to help you like I have helped my students. You guys can sign up at any time at investvithcorey.com. The link's in the information box below. Just click on training and you'll be able to book a call with my team and I so that I can help you start growing your portfolio, understanding the stock market better, and making consistent gains. So this way you will learn and grow and be able to trade on your own and do the things that you want to do, just like I can right now. I get to do all the things with my children that parents dream of, spend all my time with them and be home every day living my best life. And I was able to do that because of options and the stock market and being able to understand and grow in these different conditions that are varying day to day, month to month, and year over year. So I would love to help you guys achieve your goals. I look forward to seeing you very soon. So I want to show you a very strong strategy that I utilize every day, and more specifically on Sundays. The MES, which is the Micro Mini S&P 500, is futures, and they open up Sunday night at 8 p.m. When futures open up, actually, I think they open up at 6 p.m. One of the things I like to do every single day, but more specifically every Sunday, is look at the MES, the Micro Mini S&P 500 futures, which open up Sunday evening. And this is a very powerful precursor to what's likely to happen in the following morning. We can see that the futures gapped on Tuesday right here. They gapped up. This was right around 4 p.m., 5 p.m. Tuesday evening. And then you'll see, if I put this side by side on the SPY, you can see the following morning, the SPY started running. So the SPY ran 2 days following the S&P futures gapping up. The mini S&P gapped up. And we can see the same thing on the mini NASDAQ. It gapped up as well. So if we look at these tonight, Sunday night, and we see that there is a gap where it just gaps up and you have like a little candle like this up there, then we know that Monday morning is going to be very strong. But every day, Monday, Tuesday, Wednesday, Thursday, keep an eye on futures from 6 p.m. to 6 a.m. to see what's going on. But a lot of the real indicative moves on futures happens somewhere between midnight and 4 a.m. And this is due to Europe. They trade before we do. Their markets open several hours before ours. I believe it's like 3 a.m. our time. I'd have to double check that, but it's very early in the morning. And this is when there's volume in the futures. And this is very indicative of what's likely, very likely to come tomorrow morning. And so this is what I want you guys to understand and start practicing more of, is gauging futures and energies like crude oil as well to understand where the market's really truly going to go. So you got to be careful this week. There's a lot of data coming out and we're waiting on tariff news to see how many countries are working out negotiations. But apparently Trump's worked out some deals with 200 countries, and that in the coming 3 to 4 weeks, we're going to get these deals in writing. So we just have to wait to see how that works out. And we've got lots of data coming out and lots of earnings between now and then. So we're kind of in an area of uncertainty between now and then, but there's a lot less fear right now and things are a lot more stable and there's definitely more confidence. So definitely take that with a grain of salt and keep your eye on everything and utilize the strategies and the things that I showed you in this video. And I hope to see you in the Discord soon. You can join at any time. Links in the information box below. Thanks so much for being here. I will see all of you on the next video. Take care, fam.